Okay, thank you. Let's bring in now Aaron Smith, Sri, and talk to him. He's Managing Director of Superfund Financial Singapore. He joins us from our newsroom. Aaron, as Sri was talking there, we're seeing this flight to quality, flight out of equities to anywhere, basically, and that's one of the reasons why commodities are doing much better these last few sessions. Is this the new leg upwards for commodities, or are we still in an overall pullback trend for the commodity sector?
Well, Maura, there is an outstanding opportunity to buy gold for long-term investors today. The gold price is amazingly cheap if you consider the financial crisis that we're in. So we believe that gold can go to $1,500 per ounce in the medium term in just the next 2 to 3 years. You have to consider that gold was over $1,000 an ounce just a few months ago when the Bear Stearns situation happened. So that would be a very bullish indication that gold can go up significantly from here, primarily because of inflation and also because what we expect to see in weakness in the U.S. dollar.
Okay, 859 is where gold is right now. Give me some levels that you see gold hitting.
Well, certainly in the short term, gold can break the $1,000 per ounce level. Medium term, so over the next 2 to 3 years, we believe that gold can hit $1,500 per ounce. But for a very long-term investor, we expect that gold will get even more expensive, several $1,000s per ounce, not just because of gold itself, but because of the weakness in the dollar. Dollars are inflating, the money supply is growing, and the debt in the United States is just unbelievably large and getting larger. Officially, the market thinks that the U.S. debt is about $9.6 trillion, officially. But if you consider all the unofficial obligations of the U.S. government, Social Security, health care, Medicare, Medicaid, the total amount that the U.S. government owes today is over $56 trillion. To give you an idea, we're not very surprised about the financial crisis. In August, we issued a press release where our founder, Christian Baja, predicted multi-trillion-dollar losses in the financial market. That's happened just this week alone. So there is really unprecedented opportunities now. Investors don't need to be afraid. You can use this opportunity to buy commodities and real assets, especially gold.
Aaron, we've seen a recent revival in investment demand for commodities, gold and oil in particular, in a couple of, yesterday, in fact, in particular. But what about the physical side of the story? Do you see strength there as far as the demand-supply factors are concerned, or do you think demand is still looking a bit weak because of the economic conditions worldwide?
Look, the supply has gone down recently, and that's the main fundamental driver. But we're a technician. We're really looking at the technicals of a particular market. So you have to see that oil had a 70% run-up over 5 months. That is just an incredible price appreciation. So it's completely normal to see the pullback that we had in July and August. And it's just a great opportunity for investors who thought they missed the boat on commodities to get long. So we expect also that oil, certainly if it breaks $110, $120 a barrel, that would be quite bullish as far as resistance levels. And we expect that oil can go to $180 per barrel in the medium term. So that's about 2 to 3 years.
Okay, Aaron, we'll get back to you in just a moment. Aaron Smith, Managing Director of Superfund Financial, staying with. Let's bring back Aaron Smith now, Managing Director of Superfund Financial Singapore, who joins us again from our newsroom. Aaron, as Adam was just talking about, this flight to quality, this sort of pulling back on risk, for the most part of the year, I should say, got people going into the U.S. equity markets. But now we're seeing that begin to unwind as well. Investors first pulling their money out of emerging markets, now pulling their money out of developed markets like the U.S. and Europe. Do you see this continuing?
Well, Maura, it's also Japan. I mean, it's the U.S., it's Europe, it's the emerging markets. It's Japan is incredibly weak from a technical standpoint. And as difficult as the financial crisis is for a technical trend follower or a managed futures fund like Superfund, this is actually a great scenario because the trends are very clear. So we're able to take advantage of the downtrends with short positions and stock indexes. We're also able to trade other markets like commodities, energies, metals in particular, which had a huge rally in the past 24 hours. We certainly expect that this financial crisis is extremely bad, and it's probably going to get worse before it gets better.
Volatility has also spiked up quite a bit as well, Aaron. Is this good for fund managers like you?
Sure. The VIX is over 30 now. There's more volatility. We're not afraid of volatility. We are able to trade directional volatility. We don't care if there's an uptrend or a downtrend. We don't waste time or money trying to figure out why the market's going up or down. We just take a technical view, and actually systematic trading using technical analysis, I think, is taking an unemotional approach to markets. So there's no reason for investors to be too worried. Because the U.S. dollar has rallied, you can, in the past few weeks, it's a great opportunity to get out of your dollar assets and to get long into real assets like gold or energies.
Okay, finally, Aaron, give me what signals you are looking out for in the market, what triggers you're looking out for, whether it's much more volatility, whether it's volumes. What is it that would give you a sense that the selling has reached its peak, that we could be at a turning point?
Well, our philosophy is to, cut our losses early and let our winners ride. So we take short positions on the financials right now and on stocks in general. Investors are going to be going out of paper assets like stocks and bonds and going into real assets like commodities. That's normal. So we can take advantage of that with short positions in stock indexes. Certainly the scenario is very bearish right now. So we'll just have a limited amount of risk because we have a stop order as we ride the financial market down. And if there's a big reversal, we'll just get stopped out with no questions asked. So that's how we would trade it. But for long-term investors, there's a great opportunity to buy managed futures funds, which thrive in this sort of environment, as well as real assets like gold, especially because we expect to have major weakness in the U.S. dollar, as well as other paper assets.
Okay, Aaron, thank you so much for joining us this morning. Aaron Smith, Managing Director of Superfund Financial.